right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. If you are just tuning in, just want to let you know I got a little bit of a late start today. I slept in. Yeah, I turned off my alarm on Friday because I didn't want to wake up early on Friday, and then I forgot to reset it. Last night, and so I got up a little bit late. So I've just been sitting at my desk actually since I've gotten up, just trying to get caught up a little bit with everything. Anyway, I'm here and I'm around, but you can see, look at how slow the market is. So here's the euro dollar, and you can see just how brutally slow the market is. I mean, if you look at the euro dollar on the 4-hour chart. Now, what we can do and what we will do today is we are going to get prepared for, obviously some activity. We've got this data coming out of the North American session, obviously. So things might move, but what we'll do is we'll, take a step back and see where we're at. So I'm going to remove these fibs that you see here with the euro dollar, and we took like a bit of a longer term view on Thursday. I just keep saying Friday, but it was actually Thursday here. And let me remove that since we came out of the long weekend. You can see the volatility is just gone to basically nothing, and we're just flattening here. But notice where we're flattening. Okay, one of the important one of the important things about the where we're currently consolidating is some of the fib levels that we're consolidating at, okay, which I think we have to take note of. All right, the thing about the euro dollar is the euro dollar from where we're currently at right now, based on where we've gone since the ECB and the FOMC meeting. Okay, so you see where my cursor is at, the ECB meeting, the FOMC meeting. You notice that we've only pulled back 38% of that move. All right, so here's the ECB meeting. There's the low. There's the high. Okay, that's the high following the FOMC. You notice we've only pulled back 38%. So what does that tell you? And what does that tell me? Okay. That tells me that this has been a very shallow pullback. All right. Yeah. Chad says it's a standard retracement. Yeah. I mean, if we're gonna have a continuation move, this is a very standard pullback for a continuation. Whenever you get a 38% or maybe a 50% retracement, here I'm going to draw this out for you guys. Just since we've got a little bit of time today, things are kind of slow, so it's no big deal. So when we're we have this here we start here, we end up here, we have a 38% retracement. This is pretty standard for a for a continuation. If we get a if we continue to pull back towards the 50% retracement, we can get a continuation. Just the probabilities aren't as high, and then obviously 618, then the probabilities are probably not as high either, and it just we lose probabilities and explosiveness the further we pull back. If we pull back like a 786 retracement, then we're probably going to be doing some sort of consolidation. Okay, that's the norm. Okay, so when we have a pullback of just a 38% retracement of a move like this, that we set up for a really good continuation move. So that means that if the dollar starts weakening from here, if the dollar starts weakening from here, we could very easily bust through these highs and then put us up here at some point. Okay. Now I know it's hard to imagine right now because you look at the euro and you go like, what the hell is going to move it out there? But this is a big week. This is a really big week for the market. This is jobs. This is jobs week today, and I read something over the weekend which I found very interesting. You guys know I'm a big fan of Mark Chandler, Brown Brothers. He's been a guest here. He made a really good point on over the weekend. One of his notes, I forget which one it was. It was I had very when I'm up in the cabin in northern Arizona, I have very limited data internet connection. So it's like so funny. If for me to get internet connection from the cabin, I have to like stand on a hill. I have to lift one foot. I have to also carry a piece of a piece of aluminum foil in my left hand, and it has to be reaching towards the Little Dipper, star formation. And then, with my right hand, I have to point it towards the north end of the woods, and then all at the same time, I have to have my headset in, holding onto my phone, so I can actually get reception. I'm exaggerating a little bit, but my internet's really bad, so I don't even really bother. The whole reason why we go out to the cabin is to really disconnect from electronics. But as you can imagine, it's like the internet's so bad. I actually have to go to a certain spot in the house to even get internet. To the cabin. It's pretty funny. Anyway, the I was reading one of his articles over the weekend. And he said, because of, and I thought this is, a really good point, because of the EU, the referendum, the possible Brexit, if you will, is happening in June. They may be, they being the Fed, Janet Yellen and the Fed, may be a little hesitant to hike rates and disrupt the market during a potential Brexit scenario. And I thought that was really interesting. And so he was saying, if the data comes out good, if we see good economic data and a strong jobs report, there's a chance that the Fed might actually act in April. And I was like, man, that's a good point, because they're going when you're dealing with the Fed's, I know everybody thinks so. The Fed's only concerned about themselves, but that's not true. The Fed, obviously, I believe the Fed is probably too concerned with what's happening around the world, and too concerned with what's happening, with different central banks and what's happening in different regions, and they don't want to disrupt the market in general, that I think that they might actually take that strongly into consideration. So, I guess the point I'm trying to make here is, if this data is good on Friday, like let's say we have a strong jobs number, because the market's looking for, here, let me make sure I got the correct numbers. The market this Friday is looking for 208,000 jobs to be created. Okay, and you remember we had a blowout number. For February. So let's say the March numbers are a good number. The dollar could really strengthen and push the euro dollar, a lot lower. And then people might start thinking, hey, maybe the Fed might act in April. But the flip side to that is, if we have let's say a really shoddy number, because let's say we had a blowout number for February, okay, the March number, kind of reverts itself back to the mean. Let's say we only create 130,000 jobs this next month. The market's looking for 200,000 basically. And let's say we only create 130,000 jobs because we had a blowout number for February. Well, maybe what happens there is that we see this, we see the dollar get hit really hard, and then people start thinking, all right, maybe the Fed won't do anything in June. They're not going to act in April. They don't want to act in June because of the potential Brexit scenario. Next thing you know, you have the euro that's ripping higher above 114. So there's a lot of things to consider this week, based on Friday's jobs numbers. I think Friday's jobs numbers are going to be really important, because if they are strong, okay, if it is a strong number, it is, it does have the potential of really giving the dollar a boost for the next few weeks. And obviously we have the flip side to that too. All right, so what does that mean for us right now? Well, right now what that means is we're holding the 38% retracement. So this is important, and I think this is going to be extremely strong support for today. Now, here's the thing. If you want to go long the euro dollar, and by the way, just so you all know, I still own the euro at 111.71. I bought it, gosh, what was it, Wednesday maybe? I've owned it since right here. I bought it at like 11.71 and I still own it. Okay, that's good support. I mean, your risk is very limited here being long. Hold on one second, I gotta blow my nose, excuse me. Okay, so the lows here are going to be really important if you want to get long with stops below, pretty tight below the 111.40, whatever this low is, 111.43. That's your risk. I mean, I've known that's my risk, all week, and it's pretty much the same. Now, resistance on the way back up. I mean, this is a tight range, so if we do make it above the 111.90, we're going to start creating a squeeze. So, and if you want to just wait around and just kind of wait for the market to move here, it's such a tight range. This will give you probably a 30-40 pip move any which way you slice it. Okay, so a move above. Oh, why is that? It's not drawing too well. Huh. Oh, that's why. Let me take that off. Okay. Okay. So, a move beyond that resistance or below this support should give you a little bit of a breakout. If you just want to wait, and you're like, well, I don't know if I really want to sit in front of, sit here and watch paint dry. I don't blame you. Above 111.90 or below 111.40. I mean, this is a 50 pip trading range. But we break out of here, and it's gonna give us a little bit of a breakout. Okay, so you can wait for that too. Let's take a look at the cable. Now the cable, I still own it at 141.03 is my average. I'm up 66 pips, and you guys know that I'm staring at the potential of the inverted head and shoulder pattern. Remember, a lot of people were questioning me being long on early last week. A lot of people were like, or whatever it was, like Wednesday last week when I started buying down here at 140, 141. I think I bought it on Wednesday. Okay, Thursday dipped a little bit, but hey, like I said, I think the Brexit fears are maybe a little exaggerated at the moment. Okay, and if we start seeing, a move that's above, some of these technical areas. I think 142 was at 142.30. We wrote down last week. Yeah, right here, 142.20. Yeah, I think if we start breaking out from here, you're going to see some of the Brexit fears recede a little. Okay, and here, let me get rid of that trend line. That trend line didn't really mean anything. The good news is we know exactly where our range is. Okay, because the lower end of, the pound's going to get bearish below this 140.50 without a doubt. Okay, 140.50, and that's going to be key support as far as I'm concerned. Okay, Now, this is a 38% retracement right here. Okay. This is a 38% retracement. So basically, if we start breaking out above the 142.20, you're going to start seeing a squeeze here in the cable. Okay. If we can break above there, obviously, if we break below 140.50, this thing's going to be, you can stick a fork in it, in my opinion. I'm going to get out if we break below 140.50, but a move above 142.20. I think we wrote that down last week on Thursday. Then we're going to start getting, we're going to start squeezing a little bit here. Okay. All right. But remember, I'm looking at the potential of a bigger inverted head and shoulder pattern. Ooh, I didn't want to do that. I'm looking at the potential of a shoulder, head, and the shoulders developing right here. It's going to take a little bit of time. All right. So keep an eye on the cable. Like I was saying last week, I think the pound's little oversold. So we might start seeing a bit of a recovery here. Okay, let's go into the dollar Swiss. So here's the dollar Swiss, and I'm really hoping the euro continues to rally, and we're going to redraw these fibs anyway. So I really hope the Swiss continues to pull back here. All right. We've been in this really tight range, slowly grinding up, okay, to this previous support, which should act as current resistance. That's at 98 cents. Okay. And I'm really hoping, you guys know this, I'm really hoping the dollar Swiss pulls back, towards 95.50, maybe even a little bit lower, trip some of the stops below here, because I do want to get on the long side of the dollar Swiss. Okay, I really do. But what's the low here? 97.56. And as low as 97.59. I don't know how valid this little channel is, but just because there just hasn't been any there hasn't been any volatility, so I don't know if I'd put too much importance and I'd weigh too much on this little channel that we have here. But I think these spikes here, these spike lows here, the spike highs here, they're going to offer some support on the way down. That's 97.30. Okay. Okay, let's go to the dollar yen. So the dollar yen, one of the things that can't go unnoticed, and I'm short the dollar yen. All right, my cost average in the dollar yen is 112.78. Okay, it's been 112.78 for a while. I am down in the dollar yen, still sitting in it. I have room to add if we get up towards the, if we get up towards the 115, 115.50. I still have to add to it if we get up there. I don't know if we're going to get up there. I'm hoping we don't get up there. But the one thing that can't go unnoticed is there are record longs, or a high number of longs, yen longs out there right now. Right, via the COT data. That could probably explain some of this relentless rally that we're seeing in the dollar yen. The flip side is, and I know I pointed this out on Friday and almost every day, actually, or on Thursday and almost every day, is this. Okay, This is the dollar yen. And this is the S&P, okay? So here's the S&P, here's the dollar yen. The S&P has rallied substantially, and the dollar yen, you know, it hasn't. Now it has grinded up over the last, you know, 7 or 8 days. You can see how we've, you know, pushed higher, but so is the stock market, okay? So I guess what I'm trying to show you here is I still believe if the stock market rolls over, the dollar yen is going to roll over too, okay? But the stock market has been in a relentless grind higher. Now we are starting to see some signs of weakness the last couple of days. You know, Thursday, the market was weak, but it bounced back. You know, and then the market is obviously a little stronger this morning. But we're also approaching some resistance in the dollar yen. Okay. Now what we can do here on the 4-hour chart. Probably do something like this, but I think this is fairly valid. Okay, so what that tells us is that this 113 level is going to be really key support. See, that's roughly about 113. Last night. Oops. Okay, 114 is going to end up being resistance. Okay, and I still want to put us in a bearish trend, you know, while we're below the 115.50 level, you know, obviously, but you know, it's like I almost want to put us in a range environment, because it's been like a range environment for the last couple of months, even though we broke down, you know, a couple months ago. You know, like a month and a half ago. It just hasn't really done anything since then. But it's still overall longer term, you know, still holding up pretty well as far as the bearish trend goes. It's nice to have something on our screen that's not just a range environment as well, but yeah, whatever. Okay, let's take a look at the dollar Canadian. And then I'm going to put you guys on hold. I am running a little bit late today just because I slept in. All right. Let's go to the Canadian. Okay, so the dollar Canadian, we broke our down trend line, and I'm still long the dollar Canadian. Okay, I am still long, and I have no problems being long the dollar Canadian at this point. My cost average is 131.30. I have added to it a little bit over the last, I think I added a little bit to it on Thursday afternoon, actually. But as you can see, the dollar Canadian is holding up pretty well. All right, we broke this downtrend line. The one thing that I am aware of is this. See this yellow line right here? Okay, that yellow line is the weekly trend. Okay, we're right against the underside of it. Now you might say, well, Blake, you're long the dollar and short the dollar at the same time. Yes, I'm long the euro dollar, I'm long the pound dollar, I'm short the dollar yen, I'm short the dollar Canadian. All right, excuse me, I'm short the the dollar yen, but I'm long the dollar Canadian, and I'm long the dollar peso. I am trading the dollar on both sides of the. I'm trading on both sides of the dollar, depending on the currency. The dollar Canadian, though, it's to me, it's more influenced by crude oil and risk appetite. Because if the market goes risk averse, the dollar Canadian is probably going to spike up. Okay. Now, the one thing that I will note is that we have been capped, okay, at the 786 retracement at 133. Okay, if we break above 133 in the dollar Canadian, that's going to be a a nice breakout. So, and you might say, well, God, it's so mixed with the it's so mixed with the we are, by the way, we are bearish, and I am trading counter trend until we can get back above this. Until we can get back above this trend line, it is counter trend. But the flip side is to this is if you don't want to trade the dollar, you're like, well, I'm a little mixed about the dollar. I'm bearish the dollar. I think the pound's going to bounce, or I think the euro is going to bounce. But I don't want to be long the dollar against the Canadian. Fine, trade the euro Canadian. Buy the euro Canadian, buy the pound Canadian. You can trade, other Canadian pairs if you want. So you don't have to trade the dollar Canadian per se. All right. Now support. That spike low right there, it's probably going to be at 32.20. Was that 32.20? 32.22. Okay. That was the previous 618. We're just going to keep it right there, but that 32.20 is support for right now. Okay. All right. When I get back, we have the Kiwi, Aussie, dollar index. We'll look at the Nordic currencies. We'll look at the peso. Don't go anywhere. I'll be back in just a few minutes. Thanks everybody for being here. Be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So let's continue on with our analysis of, let's take some of these commodity currencies. So here's the Kiwi. Kiwi, range bound as well. The one thing about the Kiwi, it's kind of like these 618s are holding on a lot of these currencies too, and that has been significant with the Kiwi dollar. Now the Kiwi dollar is very much range bound, and I think the thing that we have to pay attention to with the Kiwi is that we have obviously critical resistance here. Let's remove these really fast. I'm going to remove some of this stuff and then we'll get to it. Okay, here, let's remove all this. Okay, so the thing that we have to recognize about the Kiwi is obviously we have really good resistance, and then we have obviously some pretty strong support down here as well that I highlighted with the red dotted line. But I'm going to get rid of that because it's not it's not relevant at the moment. It may become relevant. Obviously you gotta pay really close attention to it as we approach it. But you notice that our 618 is basically holding here. Okay, and that would be a 618 of this last this last move. It's really a strong 618 of the entire range. Okay, that's holding. All right, so that tells us that the lows here, it's kind of like the euro dollar at 111.40. The Kiwi here at 66.65. Okay, that's going to be really important support. Okay, 66.65. Okay, that's going to be pretty key support. Now, and I'm going to put an asterisk there. One of the things that you also have to, when you're looking at these commodity currencies, I don't know if you guys noticed this, but gold's put in a nice little reversal. Same with silver. Okay, which we can talk about here in a second. But you know, that could give these commodity currencies a little bit of a boost. So there's a low right there at 67.20, spike high 67.22. Yeah, so 67.20 is going to be resistance. And we are in a range environment. Okay, let's go over to the Aussie. Like the Kiwi, the Aussie's actually held up pretty well. Now, the Aussie, thing about the Aussie dollar that had me a little concerned last week is we made a lower high. So, you know, that told us right there that we were going to break lower. We broke lower. You can do you could say that was a double top. That was the neckline. We basically fulfilled what would be expected of, you know, you know, if you said, well, the double top looks something like this, you know, and then if we broke down, you know, that basically extended the range lower. All right, so I don't think that the Aussie's done anything out of the ordinary here. Right now, what that does do is it tells us that this resistance is probably going to be pretty big on the way back up. And that comes in at 75. We're just going to write down 75.70. So if we break that 75.70 in the Aussie, that's going to put us back up here, probably a challenge of this trend line here, you know, to 76, 20 or 30. Okay, be a nice little 20-30 pip gain right here if we can make that move. The one thing I want to again I want to point out is that if you look at gold, you look at silver, we're seeing a bit of reversal here. So that may very well support you know, the Aussie and the Kiwi for now. You also notice that we made this you know, higher low, and we might be, you know, we might just be in the middle of a consolidation that looks something like this, like some triangle consolidation. Okay, so anyway, this resistance will be important today. That comes in at, I'm going to write down 75.65, which is only about 30 pips away. 75.65. Okay, support is going to be that low right there, 74.90. And here's our range. Okay, all right. And I wouldn't be surprised to see us consolidating in some sort of triangle like this before a continuation higher. Now, again, here, let me just show you really fast, even though this is not going to go on our bias chart. Okay. Okay, let's remove that. Gold's been obviously very messy here. Okay, we had this explosive move, and we've just been, it's been really very, very, very choppy. But notice how strong gold's had a recovery. Okay, we've had this nice recovery in gold, and gold, you know, in my opinion, is threatening here to start moving higher. You look at silver. Silver's kind of had the same thing. You know, we haven't really pulled back. We pull back to you know, support here, but silver, you know, can start squeezing too. And if these start squeezing, that could create a little bit of buying pressure coming through the Aussie. So just a little heads up. Now, here is the dollar index. Let's go to the dollar index. Okay, and okay, here's the I've been messing with the dollar with the color scheme, so just bear with me. Here's the dollar index, and it's been obviously really choppy here too. Let me go back over to the daily chart. Okay, so let's take these highs right here. Oh, hold on really quick. I'll mess with this. Okay. Okay. So messing with the fit, I just had to change the color here. Make sure that we had that 618 uh, up there. That 618, it's also going to it's going to coincide with the spike high here. So it's at 97. All right. So 97 is going to be important resistance. Okay. So I'm going to put that dollar index resistance is 97. That's also the 618. Okay. Now support. It's a very slow moving market, so it's more difficult trying to figure out where the support's going to be. I think the if we're in a little bit of a channel here, that means these lows right here are going to be pretty important. This low right here, this might be channel support. It's coming through here. It'll be about 96. By the time we get down there, it'd be 96.15 or so. Okay, we're still in a range here in the dollar. Okay, let's take a look at the peso. Now the peso, I have a long in the U.S. dollar Mexican peso. My cost average is 1742. I did add to it. We broke above that 1760, and notice here, let's go over to a 4-hour. Okay, you can see there's the 4-hour, there's the breakout. Okay, all we're doing is we're just consolidating above that trend line. So that 618 is obviously very important. That comes in at 1770. Support. Right through there at 1750. So 1770 is 1750. It's a range, and let's take a real quick look at the I still have my US dollar Swedish krona short that I'm sitting in. It hasn't broken out either. The thing's still traded below that 832. We'll take a look at that here in a second. Here's the US dollar Norwegian krona. Now, what's really interesting about the US dollar Norwegian krona here, and I don't have a position in the Norwegian krona, but we're actually moving very technically, excuse me, with the US dollar Norwegian krona. There's a pretty big reversal here. I don't know if there's anything to really do other than, if you wanted to be on the short side of the Norwegian krona, your risk is above 852, but it looks kind of sloppy at the moment. So I mean, your resistance is above that 852, but I don't know if there's anything to do with it just yet. The Swedish krona is still pretty easy to read. Excuse me. You can see we rejected right at 832, which is giving us a nice reversal candle for the day. But 832, if you want to be on the short side here, I mean, your risk is above 832. I still have my stops in at like 834.50 or something. So that. Here's the US dollar Swedish krona. Resistance 8.32. And then support really interesting. That's very minor support. I don't know if you really need to pay attention to that, like right for today. Oh, maybe you do. What's that resistance here? 828. We're basically at 828. If we can break through this 828, this might. If we break that 828, that might put some downside pressure on the Swedish krona. Am I still short? Hold on. Where's my cost average? Where's my position? Oh man. How did I get stopped out of that? I am not short the US dollar Swedish krona, but I didn't think my stop was that tight. I thought my stop was at 834. Oh crap. Damn, I'm not short the Swedish krona anymore. I got stopped out like right here. I got stopped out like right here. I thought my stops were at 834. I'm gonna have to double check that. Anyway, I'm not short the US dollar Swedish krona. I'm not. I thought I was. I might still get short and reestablish my position because your risk is above 832, So anyway, damn it, man. I'm not too sure what happened there. Anyway, so there's your bias chart, and I'm gonna go ahead and start taking a few questions from earlier. It has been a very slow session. One of the other things too